At this point, like to welcome Lorien Gamaroff, who is the CEO for Centbee, a leader in blockchain technology, to come and give us the presentation on leveraging technology to promote digitization at ground level. So Lorien, I will turn it over to you. I see that you've started sharing your screen, so thank you and welcome.
Thank you very much. Can you all hear me fine?
Yes, we can.
Okay, and is my screen all visible?
Yes, it is.
Great, thank you very much. Okay, so what I want to talk to you about today, the title is a little bit different. I'm the CEO of a company called Centbee, which is based in South Africa. And what we have done is we've created a Bitcoin payment ecosystem. And so today I want to just describe blockchain, specifically with relation to payments, because obviously, there's been a lot of hype in the last 5 years. In the time that Bitcoin has been around for the last 10 years, there's been a lot of optimism and a lot of enthusiasm around this technology. And the question is, is it going to live up to the hype? And if so, what opportunities are there for Africans within the financial spectrum? Now, of course, when we talk about banking, there is an assumption there that there are institutions that will be enabling financial products that people can use. And Bitcoin is no different. And so what I'm going to do is I'm going to describe, first of all, the whole idea of blockchain, and specifically Bitcoin for payments, cryptocurrencies as they're known. Because I find that audiences often have a kind of, they've heard about blockchain, they've heard about cryptocurrency and Bitcoin, and yet they still struggle to try and put it into a context that makes sense to them. Of course, there's a lot of geeky types out there. I'm certainly one of them who likes new technology. And as we saw with the internet, 20 years ago and 25 years ago when I was, a student, getting into this whole idea of internet, it was very complex for most people to understand until companies like Amazon and Facebook and Google came along and made it easy for us. And so where we are today is in a space where we have a technology, but now we're trying to find those companies, and those companies are being born and slowly developing and growing, that are actually making this technology, this new technology, useful for people and accessible. And I want to tell you about how we've done it in South Africa. We've created an entire ecosystem. Not just in South Africa, of course, we are a global company, so most of our users are around the world, but specifically in South Africa, where we now have all sorts of ways people can interact with Bitcoin and make it useful in a financial sphere. But what I'm going to do now is I'm going to just kind of give everyone a brief overview around blockchain, how it works, and then I'm going to highlight some specific aspects which will make something like this successful. Now, of course, there are thousands of blockchains out there. All of them are promising to, be something that transforms our world and disrupts businesses. But I believe that in the same way the internet unfolded and became part of our lives, this technology will. And it won't be that we have thousands of blockchains and thousands of cryptocurrencies, but ultimately it's all going to consolidate into a single technology, a single framework or a network technology like the internet. And we will all then be able to use that technology for different purposes. And I'm going to give you that explanation. So at its most fundamental level, this idea of blockchain has been now is being used by large companies, not so much for actual practical use cases, but more the case that we have IBMs and Amazons and Microsofts, all these companies trying to provide blockchain services. But one of the things that we've forgotten is that when blockchain was invented, it wasn't called blockchain, it was called Bitcoin. And Bitcoin was all around trying to create a digital currency framework. And this has largely been forgotten. I think one of the reasons, of course, is, because when we're talking about a currency, that's very, there's a lot of political connection going on there. Governments, like to have their sovereign currency, central banks issue those notes. And if you're trying to say that there's a new kind of money, and not just a local currency, but a global currency, it's going to be rubbing certain people up the wrong way. So I believe that the reason why blockchain itself as a generic technology has taken off is because it's quite a daunting task to think that you can now create a currency that people would prefer over their local currencies. And so that's why the idea of blockchain has kind of taken over. But, the original idea of Bitcoin was to be a peer-to-peer electronic cash. And this is something that, I discovered 10 years ago and really became enamored with and really wanted to explore and to see how can we use Bitcoin and also, is it going to be something that is accessible? There are a lot of people out there who don't have access to typical digital financial products. And so, for me, Bitcoin was always something that seemed very financially inclusive, and that's really appealed to me. Now, when it comes to the whole way this is constructed and what gives it value, I'm going to now just do that. And then maybe, I'm sure after this, you'll have a much broader understanding around what Bitcoin and blockchain is all about. And then how is it going to proceed from there? And then, of course, at the end of the presentation, I want to show you how we have now managed to tackle this and are having great success down in South Africa and starting to do a global expansion. So let's just talk about the actual network and the way it works. Now, I know a lot of people are going to look at this and think, oh my gosh, I don't want to look at technology. But in the same way the internet has a lot of companies out there that provide the infrastructure. You've got these internet service providers, and you've got companies that provide ways for you to be able to upload your website and to share content and information. Blockchain is exactly the same thing. It also requires companies out there that have data centers. And what they do is they provide this infrastructure that creates this network technology in the same way there are companies out there who provide internet infrastructure. And then what we do is we go and build things on top of it. So the colloquial name for these types of companies that provide the infrastructure are miners. And, a lot of people, when they hear about blockchain, they hear about mining and, people make money from mining and, then they get all, interested because maybe they can become miners. But at the end of the day, these mining companies are large, accountable institutions. And what secures all this is not going to be just the brute fact that they have technology and they have resources. But because they are large, accountable institutions, they actually have to be regulated. And so part of this whole business, the myth has always been, oh no, this is some kind of system that's outside of the realm of regulators and law enforcement. It's all on its own. It's all, this thing that just continues without there being any effect by local rules and regulations. But that's all a myth, because at the end of the day, these companies are going to be companies that actually provide the infrastructure, but also the confidence to their customers, because they are regulated institutions. Now, they are distributed geographically and decentralized. And the term decentralized has been overused, but all it really means is that it's quite possible for this network to be 100% resilient. Because, if one company decides to shut their operations down, it doesn't mean that the whole network collapses. If you right now on the internet and Amazon shuts down and you're using AWS, which is their application infrastructure or network infrastructure, then, you're going to see a lot of websites going down. But the decentralized nature of blockchain allows it to be 100% resilient to that sort of thing. Now, how does it actually, in terms of Bitcoin, how is it sustained? Well, the way that Bitcoin worked is that when it was created, there were these tokens that were 21 million tokens, each of them being divisible by 100 million. And this is now what we call Bitcoin, or the cryptocurrency. And what happens with this is that this gave an incentive to those miners to be able to start mining, because they would then, those tokens that were originally created would be distributed to those miners in payment for the services that they provided, the fact that they're providing this network infrastructure. I'll get more into later why Bitcoin or cryptocurrency is valuable. I'm going to speak specifically about Bitcoin, but just know that this can apply to all those other blockchains. So this is a generic discussion. Now, what happens is that obviously there's going to be people out there, and if they are using Bitcoin as currency, how are those transactions processed? And this is where those miners come in. What they're going to be doing is they're going to be listening to transactions that are created by customers. And what they do is they collect those transactions into their own local repository or little, what's called their mempool. And then as they are collecting these transactions, they're processing these transactions and making sure that they are valid. And then what will happen is, in a non-deterministic way, a particular mining company will then create a processed block of transactions that will then be validated by all the other mining companies out there. And if they say yes, that these transactions were validated correctly, then what they do is they then just make a copy of that block and add it to their own local repository. Then the originally issued Bitcoin tokens, a portion of that gets allocated as a reward to that miner. Now you can see that what would happen is that eventually the Bitcoins that are issued will be finished, and there won't be any more Bitcoins anymore. And so these miners are going to be sustained by collecting very small transaction fees off each of those transactions. And this process continues as the miners, as people create transactions, then they collect these transactions into a group called a block. They process that block. If it's valid, they then accept it, and then they start building up this thing called a chain of blocks. And that's where we get the whole word blockchain. Now, this is really the fundamental process and how this infrastructure is set up. But I want you now to realize that there is a lot of kind of misunderstanding around these processes. And again, I want to reiterate that what makes this system work is that it is governed by law. You know, local rules around data and computers. It's not just a fact that these mining operators have massive amounts of resources to be able to process these transactions. They are all governed by local laws. And this is something that you won't hear a lot of, because, you know, there's been this whole group of people out there who really want to look at something like Bitcoin as a kind of tool that can sidestep governments, especially those people who believe that central banks, you know, are inherently evil because they keep issuing currencies and debasing the currencies and creating inflation, and then, you know, having these financial crises like the ones that happened in Zimbabwe and in Venezuela and all that. And so they've gone out of their way to try and express this message that Bitcoin is something that is anarchistic in a way. And that is a very unfortunate false representation of what this is all about. The original idea of Bitcoin was that it was always meant to be something that was governed by local laws and rules and regulations around money and finance. And now what has happened is that there are a lot of cryptocurrencies out there that are trying to change the design of Bitcoin so that it becomes more anonymous. Right now, Bitcoin is transparent. You know, anybody can look at the ledger and review that and see the transactions that are flying around. The transactions are private, but not anonymous, and there's a massive distinction around that. You know, that everybody has a right to be private, but nobody has a right to be anonymous in a financial system. And Bitcoin was built with that intention, to make sure that things were transparent. But over time, even the Bitcoin community themselves have become split. And now what we find is that there are multiple versions of Bitcoin. You know, most of them are all trying to create anonymous features so that you can transact anonymously and not have to declare tax and skirt foreign exchange controls. But the original version of Bitcoin, which is now represented on exchanges as Bitcoin SV, which stands for Satoshi Vision, that is the original plan, the original design, which is meant to create a legal and regulatory compliant ecosystem of cash, you know, digital cash. So now by changing protocols. Now, if you think about the internet is a protocol, and a protocol just means the rules, how the network, how information moves around the internet, the network. Blockchain and Bitcoin is exactly the same. It's a protocol, and that just means a set of rules. And when these cryptocurrencies out there always advocate for changes, they keep on wanting to change the design. What they don't realize is that they are now creating an unstable system. The internet was so successful because the protocol that defined the internet, the TCP/IP and all those network protocols, they were set in stone. And that meant that companies could come along and start building applications on top of the internet, and creating these ecosystems with service providers and application developers and so on, because they had a solid foundation. And when you change the protocols of these blockchain currencies, you actually are signaling to entrepreneurs and businessmen, business people, that you cannot trust that this is going to become stable. So if you want to see where the future of this is going, if you want to see a blockchain or a cryptocurrency and be able to tell, is this going to be successful, then one of the most fundamental principles is it the protocol that defines it set in stone? And of course now, when it comes to Bitcoin, which is the cryptocurrency that Centbee supports, we believe in that stability, and that's why we only use Bitcoin SV in our payment products. Now, and that's why we can have the sustainable ecosystem. Now, of course, it's not just fixed to currency, although, Centbee is a payments company, so we deal with payments and cash. But of course, there's all sorts of other use cases for blockchain. People are starting to look at putting securities as tokens on a blockchain, other digital assets, so the title deeds and records of ownership. Currencies are even being tokenized, so you can have a local currency, a sovereign currency, government currency that is actually tokenized on a blockchain. And I believe that this is going to become how this whole space moves forward. You're going to eventually see, and we already see how central banks are talking about central bank digital currencies. And I believe that one day they will issue those currencies on a Bitcoin SV network. So that's the sort of the interesting idea of this. In the same way, the internet wasn't just for email. We found out that you could do all sorts of other things with the internet. Streaming and social networks and all this other stuff, e-commerce. This is what is now turning out to be the case, that you can take these blockchains and especially those stable ones. And right now there aren't any, except the original Bitcoin protocol. And you can now repurpose them, have tokens and for utilities and securities and all sorts of things. So it's a very interesting space, although Centbee is specifically focused on finance. Now, I'm going to just talk about our payment ecosystem because, and you guys are all welcome to do this, download the Centbee wallet. The idea now is that we're trying to make Bitcoin easy to use. We want the average person to be able to use it, not somebody who is, understands the technical stuff around it. And so we've created an extremely simple wallet. And in that wallet, what we have done is, because we want Bitcoin to be used, we have these load options, so you can connect to your bank account and automatically top up your wallet with Bitcoin. That's just the bank integration, but one of the most important use cases is being able to top up your Bitcoin wallet, your Centbee wallet, with cash. And so what we've done is we now have integrated into retail stores. So there are just about every supermarket in the country, hardware stores and petrol stations and rural communities where there are little stores. You can now go to that store with your Centbee wallet, create a barcode, and then let the teller scan that, and you can then hand over cash, and immediately Bitcoin will be topped up into your wallet. That is the first step, to make sure that Bitcoin becomes cash and you can actually use it as a payment system. You've got to make it accessible. And so we've managed to crack that process, being able to actually have a system that does this. We've actually got some videos out there, and you can actually see people using it. This is a little excerpt of what it's like. You go to the store, you get your barcode scanned, and you can top up with Bitcoin. But then once you've got Bitcoin, this is just a map of a video of our coverage that we have now in South Africa. You know, there isn't a square inch of the country that isn't now, it doesn't give you the opportunity to go over there, top up your wallet with Bitcoin. So that is the most important thing. If you want Bitcoin to be cash as a financial system, you have to make it accessible and you have to make it simple. So this is just a little shot of, you know, I mean, if you were to just open up your Centbee wallet and go to the map and look at South Africa, you know, there isn't one spot in South Africa that doesn't allow you to top up your wallet with Bitcoin. But now, once you've got your Bitcoin, you've got to be able to spend it. One of the ways of doing that, of course, is integrating into the points of sale at those retailers, but that's difficult. So what we've done is we've now got all these payment options inside Centbee to be able to buy stuff. So you can buy mobile airtime and data and electricity. We've just actually added a whole lot more things: pizza places, supermarkets, where you can now create these little vouchers and you can actually go and spend it. So this is, the final piece of the puzzle is trying to make it possible for somebody to now top up their wallet, have their Bitcoin, and then being able to spend it. And, we're now having a lot of success with this. And we're starting to see very interesting, the market that we're starting to see come on board. You know, there's definitely that 15-year-old to 25-year-old range of people who might not have bank accounts or bank cards or anything. And they're starting to see the value in Bitcoin. Of course, they're interested in it, because it's exciting and new, but now they're starting to see utility. And that's really, where we're going to start seeing this take off. So, we're having this tremendous success now. We're seeing young people getting into this. They really love it. They feel that it's, the newest hip thing. They don't need to now do all these, go through these steps to sign up at banks and do all that stuff. And they've got, a real global payment system, because remember, Bitcoin is global. Now, of course, this might make regulators uneasy, but this is just the ability to buy electricity straight from your wallet with Bitcoin. But what's very, very important is that you have to comply with the right sort of KYC, or know your customer rules, doing the anti-money laundering and counter-terrorist financing checks. So what we do is we allow people to put in their personal information. They can put in their ID numbers, they can take a photo of their ID book or their passport. We do then validation, make sure that person is alive and it's not a fraudulent ID. And then with that, we can then start putting limits in. So, it makes it possible for somebody, if they've only provided a small amount of information, to have lower limits. If they've given us more personal information and we know them better, we can then raise those limits. And this has now made, our regulators in South Africa, where we have these products, a lot more comfortable. So much so, in fact, that they've actually added us to their experimental sandboxes. The South African Reserve Bank, they are keen to see how this unfolds. So now what we've done is, we've really managed to create a unique payment system based on Bitcoin, using the original Bitcoin at very low cost, because that's the idea, is it must be cash. And that's the success. Another thing, I'm going to finish on this now, is that governments actually, when they learn this, they love it, because one of the things you can do with Bitcoin is you can actually pay in one transaction. You can pay the merchant and pay the tax directly to the actual tax collector. So this is going to make tax collecting a lot more efficient, where at the point of sale, at the transaction level, every transaction can have two payments, one going to the merchant and one going straight to the tax authority. And of course, the Bitcoin isn't just, again, standalone. There are lots of participants, exchanges, mobile wallets, miners, and all of them are accountable. All of them do taxes. All of them, need to be compliant. And that's why, especially when it comes to Bitcoin SV being a compliant and regulatory friendly blockchain, you're going to see how this is taking off. And we now have an actual study here in South Africa. It's not even a study, it's actually in production, people using Bitcoin. So thank you very much. I think I'm going to finish there. My time is always short. I always love talking too much. And I hope you enjoyed that. Thank you very much.
Thank you, Lorien. That was most definitely very, very insightful. I'd actually request you to please email it over, the presentation. I can share it with everybody within the team. Now, moving on.